Welcome to the Self-Storage Report live from Las Vegas, the 50th annual SSA Self-Storage Association event. It has been an incredible show over the past couple of days. I'm your host, Chris Berg. Also do land acquisition for Abernathy Holdings. We're looking for great pieces of dirt in the great state of California. With me today, my co-host,
Thaddeus Campbell. You didn't call me Rad Thad today, Chris. I was looking forward to the Rad Thad. You pulled it on at the end of it. I'm great. We are in Vegas. I'm going to apologize to the audience a little bit because the Wi-Fi out here is not quite what we're used to when we're sitting in our houses and we got 1G internet service. So things get a little choppy, but super excited, and the energy level out here is insane. Oh, look who's joining us. I'm so excited. This
Yeah,
makes it
you
even
made
more
it.
fun. We got the incredible Noah Starr from TractIQ, our first partner on the show, and really excited. Quite frankly, Chris, as much as I love hearing from you, Noah talks to so many people. I'm excited to get his take on what's going on out here as well.
Well, that's exactly where I want to start. Before I do, though, I just want to say thank you to Noah. We had dinner this week here. Noah, check it out. We got a little I Love Storage hat thanks to TractIQ. So we had a great time. Gosh, was that already Tuesday night? It seems like forever ago. But I want to start here, gentlemen. I'm going to start with Noah, Thad, and then we'll get to you. And Noah, just because you've been talking to so many people throughout the week, if you were to print a news headline from the show so far, what's your headline going to say?
Well, can you guys hear and see me okay?
Seeing you and hearing you, great.
Awesome. Well, I'm glad to be here. Dinner was awesome. You guys rock. And this is so much fun to partner together. I think there's a lot of energy and a lot of excitement in the storage industry. I'll just say, so far, in my view, the event has been a resounding success. I think the concert last night at the stadium was kind of a once-in-a-lifetime experience for a self-storage conference. I don't think any of us would have expected to have such a cool event, and just a real testament to the SSA and all the folks that have organized it. So really happy to be there. I think a headline that could be interesting for this show is something along the lines of people are still banging their heads against the wall, but are excited and optimistic doing so. Something around those lines.
Man, that is pretty much I was going to say cautious optimism is my headline as well. So the way you just summed it up, hey, I'm going to keep just banging my head, but I'm happy that I'm banging my head against the wall. It's probably even a better way to say it. So, and real quickly, just so people know, to give you some context to what Noah was sharing there about the event, we were very fortunate. All of us had a chance to go to Allegiant Arena where the Raiders play. The SSA rented out the entire thing. Darius Rucker put on a show. We're walking through the Raiders locker room. I mean, it was pretty incredible to think that we've got, 3,700 people there for the entire arena taking that over. And I want to drop the number 3,700 because 50 years ago, what they said yesterday was, I don't know if you guys know this, but the first SSA event, either one of you guys want to guess how many people were there?
7.
Okay, Noah?
75.
52. 52 people were at the SSA 50 years ago. Now 3,700 plus people registered. So obviously incredible growth. Before I share my point of view, Thaddeus, Rad, that obviously you want to get yours as well. Being a news guy, Rad, your headline is what for the conference so far?
Incredible optimism. It's really that simple. And quite frankly, we'll talk a little deeper, but I'm shocked. I did not expect the level of optimism that I've seen in almost every interaction I've had.
I want to add a caveat to that because I was talking to people this morning. It's funny, I've been asking people since I knew we were going to do the show, hey, what's your headline as well? And, some people are like, yeah, it's optimism, but I think it's just because it's 50 years, right? This is big celebration because when you look beneath, is there a lot to celebrate? Which I know we're going to dive in more today. Although one guy says, hey, I think we're starting to see the bottom. Transactions are happening, acquisitions are taking place, and so we may be seeing the business starting to go in another direction. So I already mentioned my headline. I would say cautious optimism. A couple of data points that I want to share because I was fortunate enough yesterday to sit in some of the sessions and then get your guys' feedback on it. And two things I want to start with is development. And so it was very clear. We had the all-star event roundtable yesterday, CEO of Extra Space, CEO of Public, CEO of U-Haul, CEO of Storage Mart, CEO of William Warren Group. And the gentleman, Bill Hoban from William Warren Group, been doing this for 31 years, guys. He said, development has never been this hard. I've never seen development this difficult in 31 years I've been doing this. And then Joe Russell from Public Storage says, hey, we've got $800 million in the pipeline for development. He goes, and you guys have no idea how much blood, sweat, and tears is going in with our team trying to make these deals work because it's so much risk. We want to make sure we're even going to get the reward for that risk. So bottom line is development never been more difficult. And I think finally you guys are having an honest conversation. Hey, we built too much when times were good. No, I want to get your reaction.
Yeah, I think that's right. And we've talked about this on the previous show and have had a lot of conversations, but there's such a lag in development, right? And I think we've all known about these macro challenges in the housing market, in the rental rate environment, in just growth holistically within storage and all the new sites that have come online. It takes a long time for those to deliver. It takes a long time and even longer time now to stabilize. And, as rates have come down, as lenders have gotten more fearful, as interest rates have increased, and finding good sites has gotten that much harder, that creates this environment here where, public storage, I know that the CEO mentioned how challenging it is, but they're actually, I think, one of the bright spots here in development. They have a lot of things going on, and it's a testament to their team there. But I was having breakfast with a development group just before this, and, they've been in the industry for over a decade. And similar kinds of challenges. Finding sites is super hard. And then when you find those sites, actually being able to justify and prove out the story is even harder. And there's a lot we can say about, lack of transparency and data that's not available and things like that. But all of this has culminated into a really challenging time for development, which hopefully leads to a better rental rate environment in the next couple of years. But that takes some time.
That is your reaction, sir.
So I'm going to chime in a little bit. I'm going to go back to Bill Hoban and StoreQuest, just a shout out to my boss at S3 Partners, Barry Sherman, who was involved with Bill and his brother on their very first ground up development deal 31 years ago, which kind of tells you how long Barry Sherman's been involved in self-storage. But to that point, we're very lucky at S3 Partners. We're involved, I think, right now in 7 ground up storage developments at various stages around the country. And it goes to a point I've been talking about for a while now, which is the environment is really making it apparent who the people with a track record are. Who are the people that have the resources and the track record to attract money, to attract banks to be able to underwrite projects? Because to Noah's point, finding a site's hard enough, but then finding a site that you can get entitled, where the dirt doesn't cost so much to move and make right, the civil costs don't override the rest of the underwriting. It's very challenging. And I think what you're seeing is the guys that have been around for a long time are gonna end up with a bigger share of the development pile in the coming years.
Because what I want to do is sort of take people on the floor. Again, I was in some of the sessions. I do want to talk a little bit more about that because I think there were some real good nuggets. Like they did the demand study, which they typically do every 3 years. Now it's every 2. I think there's some great things to extrapolate out of that I'll share. Also, I went to one that was about the sort of the state of self-storage with the economy. There's some new employment numbers coming out today. There's a huge slowdown there. Before I get to that, though, I do want to really focus on, I think it's powerful for us to be here and then communicate what we're hearing to the audience. And so, Noah, again, just because you've got so many people coming to your booth, if there's a couple anecdotes or maybe stories, you just talked about the one this morning, but that you've heard in the past few days that really jump out to you, do you think it's important for people to know?
I think a couple of stories. Well, I mentioned my headline being that people are banging their heads against the wall, but smiling as they do it, right? I think there's been a lot of that. And holistically, it comes back to, I ask people what the biggest problem that they're facing, and they just don't have the data. They're relying on website prices. They're relying on how many storage facilities are in the area, and not being able to share with a lender, yes, I know this is what people are going to move in at for the first year or two, but when we actually stabilize this facility, this is what the rental profile of this store will look like. It comes back to it. And everyone I feel like is just throwing darts blindly at the board kind of at this point, trying to hope that they can find a site that's good at a reasonable price. And then they hope that the metrics support all of it. But there's so much metrics that people don't have. And you talk about public storage, they have hundreds and hundreds of data points from their portfolio that they leverage and they supplement with other data, right? Like a TractIQ. And, you talk about the smaller and mid-sized developers just don't have that amount of data. So they can't communicate to the lender. They can't communicate to their investment committee. And sometimes that gets you into bad deals, but a lot of times in markets like today, it means there are no deals because you can't support it. So that's, when people come to me as the data person, right? How can we help fix this? That's the biggest thing that they'll hit us over the head with is, I just don't know what to do because we don't have this information.
It's an amazing point. I'd like to chime in right now because you guys obviously have been phenomenal at providing that data. But I think something that's happened with newer people coming into the industry is they're expecting the data platform to be a replacement for the old school work that had to go into making sure development was going to work. The reality for me is TractIQ is a time compressor on the front end. I use TractIQ to get to know very quickly at a high level. And God bless you guys. I'm going to ask you a question in a minute and put you on the spot because you're working to bridge that gap between what's available from web data. And I'm going to try and get you to share your secret sauce. But my point is that once I've gotten through that initial web data scrape on TractIQ and said, hey, this thing's got the local rates on web rates, it's got the saturation level that I feel like I can put more in the market, it's got the population, I see the construction housing, I see the traffic count, all the incredible things. I see the wetlands and all the things I can find out like that on TractIQ. Now I got to go do my old school research. I got to go walk the stores that are there. I got to call my friends in the industry to see if I can get any information on what's happening. Because to your point, otherwise public storage is going to absolutely dominate because of the access they have to their own internal data in many markets around the country. So while platforms like yours are an incredible asset to have, they should not be the only tool that you're using to really understand what's going on from a rate aspect in a market. I think that's going to be wildly important for us going forward to make sure that we sustain responsible development over time. I'm going to come back to the question I asked you, which is how do you bridge that gap, like you said, between the available data that you guys are able to go scrape off of websites and get to real data of, hey, what's actually the achieved rates that are going on in that market? How do we manage to bridge that gap?
Yeah, I'll comment on what you said first and then come back to this question here. So I was looking at some data that Armand shared maybe a couple of weeks ago, and it was something to the effect of in 2022, 2023, the share of developers who were first-time developers was in the 40 to 50% range, where you compare that to like 2018, 2019, it was in the 10 to 20% range. So I think we've seen a lot of, with all the boom of storage in 2020, 2021, it attracted a lot of capital and a lot of first-time developers that didn't have necessarily the experience or the data or the relationships to understand what makes a good site. So we built, right? They built a lot, and now there's a lot of supply on the market, and I think we're dealing with a lot of those effects. So to your point, working with experienced partners, making sure you're looking at all the appropriate factors and you're not overbuilding in a market, right? All of that is now, under a magnifying scope because of the challenges we face today. In terms of your question, it's been the biggest problem, I think, in storage data since the beginning of time, right? We have a super fragmented industry. There are some really large players that have a lot of data that they can use for themselves, but, they feel like they're incentivized to not share that widely. Our company goal of TractIQ is to democratize data and make it more transparent so that you never build in a site that you shouldn't be building and you could focus on good deals. It's a really hard problem. And, I think we can have private conversations of ways that we can try to attack it. But, it's been the hugest problem. And a lot of people have shared the history of when Smith Travel Research tried to do this back in 2019, where they came to the storage industry, they met with the large operators, they said, hey, will you share data with us so that everyone can be better informed? And the large operator said no. And so they packed up, they left, and then they got acquired by CoStar. Is there an opportunity to try to change it now that the dynamics are where they are today? I am optimistic that we can do something there, but it's a really hard problem.
Thad, anything else you want to share about like a story, anecdote that's jumped out to you?
No, I think that to Noah's point, this is what we need in the industry. We need to have that level of transparency because ultimately the REITs get hurt too. When there's irresponsible development in a market, it's not like one person's able to keep their rates high. It affects everybody's rates. And we saw it play out over the last couple of years with having to implement the discount strategy policy and the ECRI policy to try and drive occupancy again in markets that got oversaturated.
Well, I think too, just to kind of be fair, a couple of things that jump out to me as we talked about last week or a couple of weeks ago, Thaddeus, is that, hey, we've got the slowest movement rate in the history of the census, right? And we know that moving obviously is a big driver of demand in this industry. And so this just seems like there's so many confluences that have come together at this particular time that do make it, as I like the way Noah was saying, hey, you're beating your head against beating your head against the wall with a smile, because the other side of the coin is what I'm starting to see, and I'm seeing this in the stock market where people are starting to rotate money out of tech into other sectors. I think it's the same thing that's happening right now. In fact, Joe Margolis talked yesterday. I don't remember the exact numbers, but there's like 27 REITs, for example. Don't quote me on these numbers, but some of the effect of like 7 of these REITs have got money going into storage, other 20 don't. But now you see a lot more of these big asset managers saying, hey, I've got to start to put more of this portfolio into an asset like a storage. And so I think what's going to be really fascinating, if you're talking about a lot more institutional money coming in this arena with still not great metrics going on, I believe they see, like I mentioned at the top of the show, unemployment's not good. Those numbers are down. I don't know if you've been watching the gold and the dollar, but it's pretty clear what's happening right now with the debasement of our currency and what's going on there. I don't know what that means long term, but it doesn't bode well for the hegemony of the US dollar. And so my point being is that I think there's bad times ahead, and I think the institutions see storage, at least based on historical, consensus, that this can be a much more recession-safe asset than obviously an office or with what's going on in that asset class. So you being an institutional guy, Noah, I'd love to hear your take based on the conversations, based on the metrics that you know. Wow, Chris, if there's now going to be, oh, by the way, another anecdote, Noah, we talked to a young person yesterday who's going to go out and raise a $3 billion fund. Now, not all that's going to storage, but a certain allocation will be to storage. If you've got a lot more capital coming after the current assets that are available and or even development, we've already talked about there's too much supply. I would love your assessment as an institutional guy. What do you see 5 years from now?
Well, there's an interesting stat, and then I have to run in 2 minutes from hosting a roundtable on how rates have trended over the last year in top MSAs. We looked at this last year where you compare the amount of capital that flowed into self-storage based on transaction volume in 2023 and comparing it to other asset classes. And we found something really interesting. So self-storage, we've estimated, is about a $400 to $500 billion total AUM asset class in the United States. We also saw healthcare is a $2 trillion asset class, okay? And we looked at this, and in 2022, 2023, the average transaction volume for the year in storage was about $15 billion. You want to know what the average transaction volume was in the healthcare space in those years?
200 billion.
$15 billion. Wow. So you look at the amount of capital that's flowed into the asset class relative to the value of the asset class, right?
Right.
That's
staggering.
Huge, huge sign of maybe too much capital has flowed into this space. So I think we're seeing groups, pause a little bit. I think we're seeing groups be a little bit more methodical. But that data point really resonated in my head around there was too much capital that was flowing in. So it led to overbuilding. It led to, inflated pricing, and it led to, unfortunately, a lot of pain that I think is coming down the pike. So 5 years from now, when we have better data and when, the United States is trucking along and growing stronger by the day, hopefully, I think that, we're going to make better decisions as an industry. I think that's going to result in better projects and a better environment for development and acquisitions holistically. But it's going to take potentially some pain to get there.
I know you've got to go in a minute, but I do want to sort of push back a little bit because I like your data and your theory and the thesis. And yet what I'm sharing is that anecdotally, even one of the stories from the stage was they were talking to a major, asset management, and they went and talked about office, hotel, all that. And all of a sudden at the end of the meeting, like, wait a second, no, we want money in storage. So my concern is I think there's going to be more capital chasing after storage than what's already been in the asset space. So I'd like your thoughts on, hey, if that's going to be the case, what's going to happen?
I think people are driven by returns. And I think in 2020, 2021, and even in early 2022, you had unbelievable exits by groups that did unbelievable things in returns. You're not seeing much of that now, right? Groups getting out now at basis, maybe a slight profit, or, taking a haircut on their equity. That sours, right, groups wanting to get into the space. So look, I think storage is a resilient asset class. To bet on American consumerism, bet on American mobility. It makes sense. It's a stable asset class throughout time. We have some really smart people and some great groups that can find some really great sites. And so I think that we'll be resilient, and we'll still want to be attracting a lot of great groups. But yeah, I mean, if we're getting back to $15 or $16 billion annual transaction volumes, I mean, just comparing that to other asset classes, like that's a lot compared to the size of our asset class. So I'd be skeptical to see if more capital flows in over the next 18 months than what we saw in 2022, 2023. But who knows?
Very interesting. So again, Noah Starr, thank you, CEO of TractIQ. Check them out. They do a great job helping you find the right assets that you're looking for. And again, as he continues to mention, more transparency in the data. Check them out at TractIQ.com. Noah, we'll let you go. Thaddeus, I want to move on to you because I know you've got a limited amount of time as well. Anything you want to talk about from a capital standpoint, anything else from the show that stands out to you that you want people to know?
Yeah, listen, I would just say I'm cautious because I think
Thanks,
that a lot
guys.
of the excitement. Noah, have a great one, man. Thank you so
Thank you.
much. I don't know the basis of some of the excitement that I'm seeing. I think we're in the Aria Casino Hotel, my favorite place in Vegas, quite frankly. We used to be in the MGM, not my favorite place in Vegas, quite frankly. So I think a lot of the optimism, it's the 50th anniversary show, Darius Rucker at halftime. I don't see the underlying things going on, tailwinds, if you would, in storage to create the level of optimism I'm seeing. So, for me, it's just caution. It's, hey, don't get caught up in this rush of SSA and 50th anniversary and Aria Casino and go out thinking that all of a sudden these short-term things that I'm bearish on in the market are all of a sudden going to disappear. I don't think that's going to be the case overnight.
Yeah, I think that's well said. And I think thus the cautious optimism, my headline is the fact that, you can also take a contrarian view. And I feel like this is what our team is doing. This is exactly when you should be looking through as many sites as possible, trying to get some shovels in the ground because nobody else is doing it. So when those things finally do come to fruition, hey, now I've got lower supply. There's been more absorption, and I've got an opportunity to have these assets, especially as you and I talk about the 18.6-year real estate cycle, knowing the timeline it takes to get these things entitled and built, especially in
100%.
California. You're talking 36, maybe even 48 months, depending on where you're at. We've talked repeatedly, hey, mid to end of 2026, just be aware, be alert, be watching what's happening with the economy, because we believe, based on this thesis, is that that's when things begin to turn. And all of a sudden, 28, 2030, we get back on an upswing and these assets are open, they're starting to fill up, and it's a great time, potentially a great opportunity. So we'll see. That's a long ways away, but I think there's some opportunities there to look over the horizon. So I know you got to go, but I just want to thank everybody for joining us. It's been an incredible few days. I think that you and I are going to have a show on Tuesday as well, correct?
Yeah, programming note for everybody. I unfortunately have to fly to Italy on Wednesday. I will not be available next Thursday. It's going to be tough, Chris, but I'm spending 10 days with my feet looking out over the Adriatic Ocean. So, if you feel like feeling sorry for me, I'll take it. But we're going to readjust our typical Thursday, 1 p.m. Eastern time, 10 p.m. Pacific, 10 a.m. Pacific to Tuesday. So we can get a show next week and hopefully be able to have a couple days also to put together some more cogent thoughts on what we've absorbed over what's been an absolutely crazy 37,000 steps in 2 days I've taken, Chris. SSA show, an incredible, incredible show.
Dude, I just want to say thank you. Like, thank you for taking one for the team and going to Italy. That was very kind of you.
And anytime you need, Chris, anytime you need. Appreciate you, brother. Appreciate it. I do want to say really quickly, and I'll say this to everybody that watches this show. Chris, I'm thankful for you, man. This show, I think, was ordained. I feel like it was the Holy Spirit. I feel like the fact that I met you was something that came from God. And, just for the people that are watching, obviously, Chris and I spend a lot of time thinking about storage, talking about things that affect storage. But I'll be quite frank, when Chris and I are breaking bread together, we're talking about how to be better men, how to be better Christians, how to live a better godly life. And quite frankly, you and I went walking in Las Vegas this morning at 5:30, and we're walking down the Las Vegas Strip, and there's homeless people literally everywhere you look. We're in a crisis in our country, I think. I feel like people are trying to fill that void in their heart and their mind with the wrong things, quite frankly. And so I just want to say to you, thank you. Thank you for being so authentic about that role or that piece of your life and the role it plays, and being able as 50-year-old men to have conversations that go way deeper than just the job that we have, and and how we interact in the secular world. So I really appreciate that, and wish for everybody that they can have those type of conversations with the people in their world.
I know you're on a limited schedule. I do want to ask you this question because it was on my heart so deeply today. I love what you're sharing, Thad. So people know this morning, we ended up having a prayer meeting. Thad invited me to that. And so it was really powerful to be a part of that here at the Self-Storage Association, have a group of people come together and really pray for the industry and for our country. The thing that was on my spirit this morning that I want to get your take on is I ended up praying for the people at the Federal Reserve. And I just watch what's happening with the debasement of our currency. I see where you've got, I think it's like 88% of the population now owns the assets. The lower to middle income people don't. If you don't own assets right now, you're going to be in a ton of trouble with what's happening with the dollar. And so I just want to get your assessment on not so much what I prayed about, but just that take on, hey man, we got to, there's an old saying out there, maybe not old, but fix the money, fix the world. I just feel like I want everybody in America to feel like, hey, let's make a dollar again. So when I go out and work and get that dollar, like it's going to have some value where I can go use it. I mean, over the last 4 years, because of the debasement of the currency, we've lost like, I think it's 28% of our buying power in just 4 years. Like that's nuts to me. So now you've got to work an extra, 0.25% just to get what you were doing 4 years ago. Just your take on that. And is that part of this restoration, or is it just, hey man, everybody turn to Jesus and that's the solution? What's your take?
Look, my take on this is very simple. It's why you and I are driven to do this show. I believe in personal responsibility. God is not, the promise was not that he's going to fix all the problems for you. That wasn't it. It is on us individually to educate ourselves, to understand what's going on, to get involved on a level of whatever you choose, whether it's local, state, federal, whatever that may be, but imperative for everyone to understand what's actually going on, to see the data and understand it, and then be able to make informed decisions in order to protect themselves and their families when times get difficult. Because to your point, there are things going on that don't bode well for the individual consumer in the United States.
Very well. I know we got to wrap it up there. Would love your thoughts and comments. We are looking to build a community here on the Self-Storage Report. Again, I'm Chris Berg, Thaddeus Campbell. Shout out to Noah Starr and TractIQ for being our data partner. And we'll see you here on Tuesday. Have a very blessed weekend.